Good afternoon and welcome to our May IHMVCU Financial Fitness webinar. I'm Katie and we are so glad you could grab your lunch and join us to learn about smart saving for kids. Whether you're introducing a toddler to their first piggy bank or helping a teen prepare for financial independence, you'll walk away today with the valuable tools and insights to build lifelong money skills with the next generation. We'll talk about why financial education matters at every age, the basics of savings and how to make it fun, needs versus wants, helping kids make smart choices, age-appropriate teaching tips for toddlers to teens, practical tools and resources to build lifelong money skills. I'd like to introduce our knowledgeable IHMVCU speaker today, Kelsey Rock. She is the financial coach at our Moline on the Avenue of the City's location. Kelsey has been with IH for a combined total of 7 years and has been in the financial industry for about 10 years now. She has held a range of positions at the credit union from teller to assistant manager to financial coach. She is a certified credit union financial counselor, which has helped her guide many members on their financial journey to achieve financial success. Welcome, Kelsey. Before we jump in, I want to remind you that everyone is muted for the entirety of this session. If questions arise during the session, please place them in the chat and we will address them live at the end of the webinar. Also, this session is being recorded for future viewing purposes. With that said, I'll hand it over to Kelsey.
Hi, everyone. Like Katie mentioned, my name's Kelsey. I'm so happy to have all of you here today. So let's go ahead and jump in. So why is financial education for kids so important? Well, financial education for children is crucial for several reasons. First, it lays the foundation for responsible financial behavior in adulthood. So by understanding the basics of savings, budgeting, and managing money from a young age, kids are more likely to develop healthy financial habits that will serve them throughout their lives. Second, financial education helps kids understand the value of money and the importance of making informed financial decisions. So this knowledge can prevent them from falling into common financial pitfalls such as excessive debt or poor investment choices as they grow older. And finally, teaching kids about money management fosters a sense of independence and confidence. When kids learn how to save and budget, they gain a sense of control over their finances, which can boost their self-esteem and prepare them for future financial responsibilities. Overall, financial literacy is a vital skill that empowers kids to make smart financial choices and achieve long-term financial stability. Psychology today says most of our habits are developed by the age of 9. While some habits can begin forming earlier, particularly in infancy and toddlerhood, the majority of consistent routines and patterns tend to solidify by the time children reach 3rd grade. That is crazy to me. Your mindset makes a difference when you approach the subject of money with your children. So if you're stressed or tense, your kids are going to pick up on that and create negative associations with money. So try to adopt a mindset focused on education and empowerment, aiming to instill a positive and responsible financial attitude. Try to encourage questions, be honest and transparent, and make these conversations a regular part of family life. I've heard so often from members that their parents never discussed finances with them because they thought it was, too personal or rude to ask questions like that. But now these members are struggling with their own finances due to lack of knowledge. It's our responsibility as parents to set our kids up for success. We can do that by not only discussing money with our kids, but by leading by example. We can lead by example by modeling good financial behavior. So try to say no to impulse buying, learn how to comparison shop, learn how to bounce back from mistakes because there's going to be plenty of those, and do your best to save for emergencies. So, how does your family earn money? Try to explain how your family earns money to your kids by relating it to real live experiences. So, for example, something that I might say, like, I work at a place called IHMVCU. The work I do there allows me to receive a weekly paycheck on Thursdays. A paycheck equals money. This money helps pay for our needs like our house, gas for our car, groceries. I put some of the money that I earn in a savings account in case we have an emergency, like having to put new tires on the car unexpectedly. The money I put in savings also allows me to save for your travel, baseball expenses, and vacations. So that's just a little example there. A fun activity that you could try that we also recommend is to maybe take your kid to a grocery store and give them a budget for your food needs. So have them shop for the needs, putting aside extra wants as you go. Once you are done shopping, total up the needs. And if there's any money left over in the budget, have the kid go through the wants and choose a couple of things that they would like to keep, or, they can take that money and save it for something special for the future. Before you do this, depending on your child's age, you may have to discuss the difference between needs and wants. Understanding and explaining the difference between the two in budgeting, it helps budgeting and make financial decisions. It ensures that essential expenses are covered first before spending money on non-essential items. So obviously needs are essential for survival and basic well-being. These include food, groceries, obviously, shelter, so maybe your house payment or your rent payment, clothes, your utilities, so water, electricity, and transportation. So not just your car payment, but gas, insurance, things like that. Wants, on the other hand, are non-essential items or services that enhance our quality of life, but are not crucial for survival. So these can include entertainment, like going out to movies, luxury items. So the newest iPhone, gaming systems, Lululemon leggings. Pro tip though, if your kid does have a gaming system, I learned myself that don't leave your card information saved in that system. My son thought it'd be fun to buy a $70 game without my knowledge, and he didn't like it when I grounded him for a month and he couldn't play it. So yeah, just learn from my mistake. Dining out, vacations, and hobbies are also, considered wants. So like maybe travel baseball, volleyball, competition cheerleading for the kids. So obviously these are all important, and we want our quality of life for our kids to be important to them and be passionate about things. But, we still have to be able to afford these things. And if they want to continue to do these things as they get older, they're going to learn that they have to work for the extra things they want in life. A good way to teach your kids this principle is when they ask us for money to go do something, because, we all know that they will, instead of just giving them the money, use it as a learning opportunity for them. So for example, your kid wants to go to the movies with friends. It costs $12 for a ticket. They need to do chores to earn this money, and they have a few choices. They can do 1 hour of chores to earn them just the $12 for the ticket. They could do 2 hours of chores and earn $24 for the ticket and snacks. Or they could do 3 hours of chores to earn them $36 for the ticket and snacks, plus a little bit of extra money for like savings for the next weekend. Let them choose. Giving them options makes them feel like they're in control and are more likely to get this done without like argument or complaint. If you can, maybe try to sway them into option 3 so they can learn about saving for the future. Speaking of savings, what is savings and why is it important? So obviously savings is setting aside a portion of your income or money for future use instead of spending it immediately. This can be done by putting money into a savings account, a piggy bank, or other forms of investment. And it's super important for several reasons. So it gives you an emergency fund. It provides a financial cushion in case of unexpected expenses like medical emergencies, car repairs, or job loss. Financial goals. So it helps you achieve short-term and long-term goals, such as, buying a new iPhone, going on vacation, saving for a car or college. Financial security, it offers a peace of mind knowing you have funds set aside for future needs. Avoiding debt. So this is a big one. It reduces the need to rely on credit cards or loans for unexpected expenses, helping you avoid debt. It's also going to build wealth. So over time, saving money can grow through interest or investments, contributing to your overall wealth. So the 50-30-20 rule, this rule recommends putting 50% of your money towards your needs, 30% of your income towards wants, and 20% of your income towards savings. So this is just recommended. I know with my budget, my income, I'm not at the 50-30-20 right now, but just try your best to get as close to this percentage as possible. Overall, savings, it's a key component to financial health and stability, and it allows you to be prepared for the future. I wanted to talk to you a little bit about our Balance Builder Junior Savers promotion. So this is an awesome way to get your child set up for saving success. We do have some more information on a website. Katie's going to put that short link in the chat for you to click on and use for the future. But basically, this is a savings account for minors that earns 3% interest on the first $2,500 that they have in it. There are a few tasks or requirements that are needed to do before you can earn that interest. So what those tasks are is once you get the account opened, you have to sign up for the online banking and opt into e-statements. So instead of the statements getting mailed to you every month, they're just going to be online. The second task is every month, the balance in this account has to increase by $1. This doesn't include the dividends that we put in there, the interest that's earned. It's based off of your deposit. So that's just the Balance Builder savings account. The promotion is IH is going to match a $50 deposit that you put in there. So there are extra tasks that you have to meet before you can earn that extra $50. But if you click on the short link that Katie posted in the chat, those are listed all the way at the bottom of the page for you. You can set up your account online or by visiting any one of our branch locations to get that opened. You will have to bring a few things with you. There are some documents that are required. So you will need to bring an ID for both you, the parent, either a driver's license, passport, whatever, and your child. So if they're old enough to have a school ID, great. If not, that's fine. If they don't have an ID, we at least need either a physical social security card or a physical birth certificate. So just try and bring as much as possible. So what we wanted to do was kind of show you how this account can benefit your child just by going through a few examples. So this first example, we're going to start with Julia. So she opened a Balance Builder Junior Savers account in January of the year that she turned 12. So that $50 opening deposit, she put that in there. From there, she made a monthly deposit of $30. So by the time August rolled around of her 18th year, her balance in this account was $2,677.54. Moving on to Caden, this example, same thing, $50 deposit in January, the year he turned 12. Same thing with that monthly deposit, $30 a month. However, after each year, Caden increased that $35 by $5 every single year. So year 2, $35, year 3, $40, and so on. So after that, in August of his 18th year, he had $3,889.16. And if he were to continue this throughout college, when he graduated, Caden would walk away with $7,683.23 just by increasing that minimum deposit by $5 every year. That's crazy. Third example is Christian. So same thing, $50 deposit, the year he turned 12, $30 monthly deposit. Same thing with Caden, increased by $5 every year. However, Christian started working at 16. So he also adds $100 per month into this account. So by his 18th year in August, his final balance was $7,216.32. You can see by these examples, the interest and the increasing the monthly deposit, how much of a difference that makes. After your child, has a better understanding of opportunity costs, wants and needs, savings basics, and they've hit the age of 8 or older, you can get them started with a checking account. So a checking, it's intended for the money you need in the short term, allowing you to, easily access your paychecks, pay bills, make purchases using a debit card. We do offer 2 different checking account types. The basic ones just are free checking, no minimum balance, no monthly fees, no requirements, anything like that. The difference between the two, free checking doesn't earn interest, Cash Booster does. So our Cash Booster is going to earn you 4% interest on the first $15,000 that you have in there. Those tasks are pretty much the same as the balance builder. You have to have e-statements and an email on file. So no like monthly increase or anything like that. So just 2 simple tasks. You can earn that 4% interest and up to $25 of ATM fees refunded to the account at the end of the month. That's the account I have. I really like it. Next, we're going to go over different teaching methods and strategies based off of your child's age. So one of the most important things to consider when you have children is having family conversations about money based on their age. As children grow and develop, so do the most effective ways to teach and practice positive financial habits. So thankfully, there are a few big life events that happen at different ages that provide opportunities to discuss these financial habits. So age-appropriate techniques for different age groups. By making saving engaging and relevant, kids can develop good financial habits that last a lifetime. So let's start with age 3 to 5. Potential activities for the kids in that group, piggy banks. Give them a piggy bank and let them physically see their savings grow. Taking it a step further, you can do savings jars. So use like a clear jar for different goals. So one jar for spending, one for saving, one for sharing. Then they can actually see through the jars and see the visual of that money increasing. And it kind of helps them understand the concept of saving. Also, there are a lot of books out there about money, especially for that age group. We don't want to overwhelm them. So search online to find age-appropriate books helping your child learn a little bit more about it. Moving on to ages 6 to 12, you can set goals with your kids. So help them set a savings goal for something they really want, like a toy or a game. This is going to give them something to work towards. You can also give them an allowance. So if they do already receive an allowance, encourage them to save a portion of it each week. And if they can, then maybe volunteer to like match their savings to try and motivate them a little bit more. You can also try giving them a reward system based off of their grades. So this is going to motivate them to strive for good grades through positive reinforcement, like, money all tied to academic achievement. So maybe $5 per A on your report card and, $2 per B, something like that. You could also try doing like a do-it-yourself budget binder. So if you prefer a more like hands-on approach, create a budget binder with your kids, including sections on income, expenses, savings, and goals, and let them decorate it to make it their own. Moving on to ages 13 to 21. So this is where it gets kind of a little bit more important because they can really understand in the long run how it's going to affect them. So take your time with this age group. So try and budget with them, help them create a simple budget for tracking their income, like allowance or part-time job and expenses. This is going to build responsibility. A few fun savings challenges. Go ahead and create a savings challenge like a no spend week or save $1 a day kind of thing. Make it a game for them. Help them manage their savings and checking account by tracking their spending habits. Teach them about interest and how their money can grow. For kids that are maybe 16 and older with a job, help them learn how to save 20% of their income and watch it grow. Maybe charge them like $100 for rent every month and set it aside for them. Maybe put it into a CD to earn a little bit more interest. And once they're ready to maybe buy a car or move out on their own, you can give them the funds back for a down payment or a security deposit. For those 18 and older, help them apply for a share pledge loan or a credit card to help them start to build and establish a credit score. There are a lot of other interactive activities and games to make this fun for them. So we'll just go over a few of those. For the younger kids, give them a pile of coin to sort by denomination. It's a simple way to get them familiar with money while having fun. Playing Monopoly or the Game of Life. So these classic board games, they teach money management, saving, and spending in a fun and interactive way. My son actually, when I picked him up from school the other day, I asked him what he did this weekend with his dad. And he said, "Oh, we played Monopoly." I said, "Oh, was it fun?" He said, "It was all fun and games until I lost all my money." I'm like, "Okay, well, been there." So I asked him, like, "Did you choose to go to work or go to college at the beginning of the game?" He goes, "Mom, that's the game of life." I thought that was hilarious. A do-it-yourself store. So set up a mini store at home where kids can buy and sell items. Use play money to teach them about transactions and saving for what they want. A savings race. Set aside or like a savings goal and see who can reach it first. This can be a friendly competition between siblings or with a small reward for the winner. Savings bingo. Create a bingo card with different savings tasks like saving $5, skipping a treat, or doing a chore for extra money. And obviously mark off the tasks as they're completed and aim for a bingo. A grocery store challenge. So it's a lot like the one we talked about earlier with the needs and wants, but this can be in a store or on the grocery store's website or app. Give your kids a list of items that you want them to buy and give them a budget. After you review the items with them, once they're done, go through and see if there were any items that were cheaper, maybe by switching brands. See if they could have saved more by buying bigger sizes or buying in bulk. Maybe use 2 different apps. So like I use Instacart for Aldi and Walmart, both, and then compare prices between both and see which would save you the most. So we do have a lot of resources on our website. There is actually a Compass course on there called Family Conversations About Money. It's a 7-minute course that helps you learn about topics, strategies, and best practices for having family conversations about money. I highly recommend it. Definitely check it out. And Katie's also going to post that link in the chat for you. All right, that is actually all I have for you today. So please drop any of the questions that you have in the chat. I am going to go ahead and pass it back to Katie.
Thank you so much, Kelsey. This was all really awesome information. I specifically enjoyed the comment about your interaction with your son about, Monopoly. We love the game of life at our house, and it gets pretty competitive, but it's a good experience for sure about money. So I love it. Like we said, or like Kelsey said, we have some time if you'd like to drop some questions in the chat for us. I do have one to get us started. At what point do you get the $50 if you do open that Balance Builder Junior Savers account for your child?
Oh yeah, absolutely. So the $50 deposit, it's going to occur within 30 days of all of the requirements being met. So those requirements, like I said, are on the website all the way at the bottom, but just to go through quickly, signing up for e-statements, that $1 increase per month, the account has to be open for 60 days and the average available balance has to be $50 and the account has to be active at the payout time. So basically, to make it short and sweet, deposit $50 when you open it, sign up for e-statements, increase the balance by $1 a month, and you'll get your payout within 90 days.
Perfect. Thank you for all that information. That really helps. We have another one here. What do I need to bring to open an account for my child?
Yeah, absolutely. So depending on the child's age, you may have to be on the account with them. I believe they can be on it by themselves once they turn 14, I believe. Don't quote me on that. But if they're younger than 14, I believe, obviously bring your ID. Hopefully your ID has current address on it. If they don't have an ID, regardless, bring either a physical copy or a physical social security card or a birth certificate. If they do have an ID, obviously bring that with them as well.
Perfect. Thank you. Another one here. Can I open the account online?
You absolutely can. If you go to our website, there should be at the top of the screen, I want to say, I think it's accounts. Don't quote me on the exact verbiage, but at the top of the screen, you're going to see a few drop downs, and one of those options will be open an account.
Mm-hmm. Perfect. Wonderful. Awesome. Those were great questions. Thank you so much for your participation. And we appreciate you joining us during your lunch hour. Oh, we did have one more sneak in. Let's go ahead and address that. Would it be more advisable to deposit savings into a mutual fund rather than a savings account?
Yeah, depending on, your overall goals, you got to do what's best for you, right? So if it's starting for your kids and it's a smaller dollar amount for now, I would probably, for my son, I would put it in a savings account until I reach a higher dollar amount, then look into, bigger investments. We do have an investments department that deals with that type of thing, or, whichever one you prefer to use, but they do normally look for higher dollar amounts, longer terms. If you're looking for something a little bit more liquid, we have those savings accounts, and we also have CDs for children.
Perfect. Thank you. And if you had further questions and wanted to talk more specifically about that, you could always set up an appointment with Kelsey. The QR code in order to do that is on the screen right now. You could also utilize the short code underneath as well to book an appointment. And then if you're viewing from your phone, again, you can use that short link if the QR code isn't going to work for you, right, in the web browser, and pull it from there. Remember, you can also open an account online like we just mentioned. So you can do that. Booking the appointment is very easy. You can just follow these steps. You can choose the item that makes sense for you. In this case, open an account, choose the date and time that works best for you, provide your email and phone number, any other details, and click the blue button that says book. Please be sure to watch for a follow-up email over the next couple of days with the recording of this session and a survey. We'd love to hear your honest feedback about the webinar today. Also, please watch for other free webinar opportunities that will be available monthly for sign up. Our next workshop is on June 18th at 6 p.m. It's on the topic of budgeting basics, Money 101. The sign up link to get registered will be in that follow-up email that you'll get as well. So thank you so much for joining us over your lunch hour, and we hope you have a fantastic rest of your day. Thank you.